Traders, it's Kyle from K Capital. It is 3/21/2016, about 9 o'clock Eastern Time. Apologies for the little hiatus over the last couple of days. I was on some personal travel, and we got a lot to catch up on here. First and foremost, the Dow itself has seen a pretty big rally back up to, prior levels of resistance in terms of the areas highlighted here. We made significant progress ever since we crossed the 200-day moving average. We've had now, I think, roughly 8 days of upside in the Dow. I think this is going to continue, at least for the short term, maybe test 1780. And again, I think it's going to pull back down. I think the overall trend here, if we want to take a look at this, is definitely going to be downward. I say that because I don't really think we're going to break through this level here of 1770 to 1790 or 18,000. I think we tried to do that before, and I think we're going to test that area again and start to look for more shorts, and we'll see progression back down to 16,000s. If we look at the S&P, the S&P tells a pretty similar story in the sense that we've seen consecutive days up ever since breaking the 200-day moving average. We're getting to that area here highlighted in blue, to where I think we're going to see some significant levels of supply or resistance, and then we're going to retrace back down to the 200-day moving average. So the takeaway here is that in the macro picture, the U.S. markets are, in the short term, I think they're going to be bullish, but again, once they hit that area of significant resistance, I think we're going to see new lows, and I think we're going to continue to test new lows. And if you look, each wave here, what I mean by that is, there's waves down. So you had your first wave down, you broke the 200-day moving average, you tested back up. That's wave 2. Wave 3, you made new lows, passing these lows here in the 1870 range. You made lows down to 1814. Wave 4, test back up. You don't see a new high here, which confirms the downtrend. And I think we're going to see new lows probably south of 18,000 or 1,800 in the S&P. So again, that's kind of the macro picture in terms of what I'm looking at. We're going to take a look at our specific stocks that we're in right now. SEIM, kind of a fundamental and technical play here in the sense that, volume was the initial indicator. You look at the fundamental story, and in my opinion, now that the products here from Sientra are back in the U.S. market, I think this is only a matter of time before it trades back to the level where, the pre-release of that bad news where they pulled their products off the U.S. market. I think we're going to see, significant upside to that level. Technically, we're holding the area in blue here, which is really a significant area where we broke out. If we want to zoom in here, we can see that the technical story, you're seeing a nice up pattern ever since the low of $253 back in November of 2015. And you see a confirmation breakout here when the EMAs crossed and the price saw a significant upside. And we rallied really from the $17 or $7 range all the way up to 10. Ever since then, we've tested this area now twice in this area, basically in January, as well as all through February and March, and we've held that level. So what that tells me is there's still significant buying here. I think we're going to continue to consolidate here before seeing and testing back up to the 200-day moving average. And I think fundamentally we're going to see, definitely accretion in the price as this company continues to release their products back to the U.S. market, and we're going to trade at the IPO level, I think, in the $18 to $22 range. So 6-month price target here. It's definitely a value play in the sense that, this is severely undervalued. And I think the market is definitely, misinterpreting and mispricing this asset, to say the least. So, long story here for us. I think our average price is right around 7.6. So we're sitting on a little bit of a loss, but nothing too concerning. CSCO is another play. Our average price is in the $24 range. This has been really a pure value play. Technically we're seeing a nice cross in the EMA ribbon here. We saw a significant breakout above the 200-day moving average and a rally all the way up to 29 or 28.50 ever since. So again, this is a long-term hold. Our initial price target is going to be in the $29 range, where we'll start to take some profits or around $5 a share. STRL is one we added to last week. This is definitely a low volume play for us, which I usually do not like. That said, the waves here are definitely something that I think is pretty tradable in the sense that you had one wave up, two down, three up, four down. I think you're going to have a fifth all the way back up to seven. I think we went long in the low fives. So again, right now we're testing this area of support in terms of the triangle pattern here. We've now bounced off of that 1, 2, 3, 4, about 10 times probably over the last 6 months. So I think we'll consolidate here and again start to trend up and test 6, 650, and 7 to make new highs, which should be a nice return for us. It's just slightly risky given the daily volume's very low, but it's something that's a decent swing trading pattern for us. CDXS is something that broke down last week. I didn't see any news really driving the breakdown. And what I mean by that is, their earnings, they had a decent pop after their earnings and then just sold off for no apparent reason or nothing that I could really see any major driver for. So I'm holding that for the time being. I think we entered here in the 3.6s. So again, sitting at a loss, but right now nothing too concerning. I want to make sure that we test and hold, this level here. And right now we saw the price bounce a few times all the way through the end of 2015. We consolidated around that price area and saw a nice bounce back up to 450. I'm looking to see consolidation there and may add if we do see some volume come in at that price level. So that's really the major story that we have in terms of our technical swing patterns. Sandridge is one that we know is a long-term value play or call option on crude. If we look at it right now, we're starting to see the price trend and consolidate above the EMAs, the 20 EMA all the way to the 50. We have earnings that have been released. The key takeaway is really that they made their interest payment on their debt late last week. It's huge because basically what that says is if you're going bankrupt, fundamentally you're not going to make that payment. So they have the liquidity. Granted, they're now burning down some of that cash and chomping away at some of their credit facility, but for the short term, I think it's a great fundamental story in the sense that crude is starting to slowly trade up, and this company can make their interest payments and their debt obligations. So I think that speaks volumes to the pattern and the strategy that management is following. And what I mean by that is they took themselves to the pink sheets. You can't really short that stock any lower than 2 cents a share. They're going to consolidate along that area, which they have been, and they did for roughly 3 months. And now you're starting to see, hopefully, some price accretion back up to 20 cents and higher. Our average price is right around, I think, in the 30s. Initial target would be 50 cents over the next 6 months. So again, that's something that we're looking forward to because we have a decent position in Sandridge. It's one of our few energy-exposed positions. So that's all I got right now. Frankly, I'm feeling a little bit under the weather, so I'm going to probably call it a night soon. We'll talk tomorrow, and hopefully see you guys in the chat rooms or in the daily updates that we're going to send you guys. So we will talk soon, and have a great night.